And how do you ensure scalability and security within your infrastructure to meet the needs of both the financial institutions and startups, but also, of course, the requirements from the regulator, the BaFin?
Yeah, I think there are three aspects to it, right? The first one is understanding what is it that you're regulated with and how do you comply with these regulations. And that starts with setting up the right, strategies, policies, procedures, work instructions.
Welcome to FinScale, the show that takes you to the heart of finance transformation. Every week, Selene Niederkorn and her guests explore new initiatives shaping the future of the industry. Enjoy the show.
Hello, everyone. Today, I'm thrilled to welcome Max Linden, the CEO and co-founder of Lemon Markets. Hi, Max.
Hello.
It's great to have you on FinScale. Thank you for joining.
Thank you for taking the time. Super pumped for our conversation.
Yes, and I should mention to our audience that we're actually recording this for a second time because we had connectivity issues during the first session. And thank you so much, Max, for kindly giving us another hour of your very precious time. Okay, so Max, we have a lot to discover with you and particularly the concept of embedded investing. And I would love that you take a few minutes to explain to us this concept in great detail.
Maybe let's start very, very high level. What do we think about and what do we mean by this? I think generally, right, there's lots of touch points that people have with their finances in many different contexts. And then on the other side, right, there is the issue in Europe that not a lot of people are investing. And when I say investing, right, what I mean is investing in capital markets. Mm-hmm. Why do I think investing in capital markets is so great? Well, for a very simple fact, you, I, and Jeff Bezos can buy the same high quality asset, aka Amazon, for the same price. There's not many markets where this is given for all participants, independent of how, big the size of your pie is or how wealthy you are or how much you can put into the market. And so that's what makes investing in capital markets so special, and that's why I personally believe that this is something everyone should do. Although, especially in Europe, as I said, right, the numbers speak a different language. Depending on which country you look at, you are between 10, 15, sometimes 20%. Right, there's a few countries like Sweden or Netherlands who are doing great, but then there's the European average around 18%, and so that's bad. Why? Because if you want to take care of your future, if you want to take care of your pension, then investing in capital markets is a great way to do so. Mm-hmm. Now that we have established that investing in capital markets is a good thing, now the question becomes, okay, why should we embed this, or what does it mean to embed it? The way how we think about it is, ultimately, right, to solve this problem of getting more people on board, we believe that it needs to be ubiquitous to invest. Mm-hmm. And what I mean by this is that you pretty much at every important decision of your life, of your financial life, investing is one of the options. And so this kind of concept is what we believe and what we stand for. And therefore kind of what we want to see in the world is that more companies that are currently already offering some form of financial product integrate investing to make it accessible and also affordable for their customers. Mm-hmm. And so that's the way how we think about the concept of embedded investing, basically making it a feature of your existing financial product.
Okay, so it's a concept that is rather in a B2B realm. I read on your website different concepts around brokerage, vertical brokerage, embedded brokerage, and contextual brokerage. So I think it would be worth also spending a few moments to explain the different kind of brokerage you're referring to.
Yeah, so we use this kind of framework to think about the different use cases that are out there and that we want to support as a platform. We talked about embedded investing, right? Embedding it in an existing product and making it a feature. Let's think about a classical bank, right? A classical bank, the key product that your customer uses is your currency account or your checking account. And then you build other products around this. And usually investing is an important part. If you look at the wave of, direct banks, that came up around the 2000s that all used some form of digital distribution channel, they are very heavily relying on this bundling of different features. For example, in Germany, I'm a customer of ING, and they combine these things with each other. So that's kind of when we think about embedded. And then we mentioned kind of vertical. What do we mean by vertical, right? We mean that a company or a product is vertically focused on investing, which means that this is kind of the thing that they're about, right? I think a good example for this could be a robo-advisor or an investing platform that offers different asset classes, or even maybe someone who's a bit more specialized. I don't know, a platform offering, let's say, access to private equity, right? So those are use cases where we would say, okay, well, this is very vertically focused on investing. Could also be wealth advisors and other use cases. So that's what we would consider as someone that's vertically focused, and their investing is the key product. People are coming to your platform for this key product.
Okay.
And then we have kind of the last thing, which is contextual, which is for us kind of the bucket to put all the other exciting use cases in that we stumble upon, which is a great deal of them, as we are fortunate to see many people who want to build innovative products. And there we see investing merely as a function in that product. And what we mean by this is basically, okay, this product could exist, or the product experience could exist without investing. By using investing, right, you can make it better. And that's something where kind of we think about how can you really kind of integrate this in the experience, that for the customer this is something very seamless. And I think an interesting use case for this is, for example, if you think about paying a deposit for your for the flat that you rent, right? This deposit can be put to a bank and do nothing, but this deposit could also be put to use. In the end, your product is the renting the flat and all of the processes alongside with this. But if there could be a function for how you can make some return, or how your landlord can make some return, or how you can both make some return, right? That's an interesting addition. And so that's kind of the way how we would think about it, looking at the different use cases. But clearly for us, right, we see most potential in the vertical and embedded space, especially on the embedded sides, as there's by now so many platforms with great distribution that have some form of relationship around a financial product already with customers, that helping them to integrate investing for us seems to be the greatest leverage out there to get more people into capital markets.
Hello everyone, I'm stepping in for a minute to thank you for being by my side for nearly 5 years. This show fuels my own reflections on the projects I support, whether it's with entrepreneurs or investors in France, Luxembourg, or across Europe. If you would like to discuss the challenges of transformation in investment, the creation or development of investment vehicles or companies, or even just the operational aspects, feel free to reach out on LinkedIn and enjoy the show.
If we take example of real companies in each of these use cases, what are the typology of companies that are looking for such solutions?
Yeah, I think if you go to the first one around vertical, right, I think this is fintechs, wealth managers, brokers. That would be the typical kind of clientele for these use cases. Second one, embedded, is really kind of banks, platforms, right? Everyone that's working on becoming a super app or kind of somewhat in that direction. And then I think for the third bucket, we mostly talk about companies that come more from a software or technology angle. So that's kind of the way how I would think about it.
And how did you have this idea? Is it something that you saw from the US, or is it something that popped up in your head?
Well, I think for us it was more a process of realizing, okay, there's so many different use cases out there. Like we need to categorize them in some form, and we need to do them justice in understanding, okay, how important is investing there? How important is it for those companies? How important is it for their customers? And what way does it need to be positioned to work? And so we're seeing those many different use cases. And yes, of course, right, you could say, hey, this is a bank and the bank always needs this. Or you could say, hey, this is a robo-advisor, the robo-advisor always needs this. But for us, one of our principles is customer first. And so we wanted to apply some form of framework that helps us think about this from the customer's perspective. And that's kind of what we try to do here, as in thinking, okay, why does the customer come to this product and consume this product? And what role does investing play here? And that's very much the way how you can look at it, right? If someone comes to one of these vertical use cases, right, investing is the clear reason why a customer comes to this company. And so they need to be very differentiated. They need to have worked out a good strategy. And then, the more it goes, right, embedded, the customer doesn't really come for the investing probably, but if they are around, then you can get them into it, because it could be very much driven by convenience. And then the last round is like, okay, the customer doesn't really come for it at all. They come for a very different problem. But if you can use investing to help them get a better experience or result, or help the company achieve greater degree of profitability, that could be interesting. And so that's kind of the way how we thought about it. And I think it's one framework to look at this market and to look at use cases. Not the only one, but one framework that can help categorize what's going on out there.
Okay, so I'm coming from wealth management. I've been working for quite a while in private banking, and I precisely understand, because I've done it many times. When you execute an order, you just give a call to the trader, and then it goes through the process, and you have the different constellation of depository banks and sub-custodians, etc. So in your precise case, how is it working concretely, and how do you abstract regulatory, technical, and operational complexity for all those partners?
Wow, a super detailed question. Maybe let's start on a bit higher level, right? So you mentioned correctly all the different kind of participants in that chain. The value chain of investing needs specialists, different specialists to do different things. And that's intentionally designed in this way by the regulator, so that you can make sure that the customer gets the best price and quality. So at Linden Markets, right, we are a regulated broker-dealer and investment firm basically here in Germany. And so what we can do and where we start is basically we can take the order from the customer and then we can bring it to the market. There we have the first, let's say, partner that we meet in the chain, right? Because you need to execute this order somewhere. Usually you do this as on an exchange. If you buy a mutual fund, you do this sometimes directly with the transfer agent or the fund house. So that's one partner that we have in the chain is the different execution venues and execution partners. Once you have made the trade on the customer's behalf, now the next step comes in, which is okay. You need to perform some way of getting the shares into your custody and giving the other party cash to settle, right? There it's important that you have a good payment infrastructure, and therefore we have partners on that front as well. And then last but not least, as I mentioned, right, you need to store the assets that you got somewhere, and for that we are using BNP as our custodian, as well as all funds for all things kind of mutual funds. And so for us it was always key part of our strategy that we work with established partners that help us solve problems at scale, that have existing market relationships that we can tap into to accelerate our path and keep focused on what matters most, which is innovating to customers. And so this whole customer layer, basically translating these wholesale capabilities that we are getting from those big partners and breaking them down into, okay, you as an individual can open an account with us. You as an individual can place a trade. And doing all kind of the reporting and everything kind of that's necessary for it. That's really kind of the core that we are focused on. And so that's still very high level, but already kind of on a fairly high degree of details, kind of the process that investment go through and where we are positioned in the value chain and who we are working with.
And you mentioned one of them, BNP Paribas. There are several other players that you didn't name, but that are part of construction, part of the business that you built. How did you select them? And because there is a lot of intricacies in your business between the different players, and you're a sort of orchestrator. So, what is the reaction of all those players? And I was mentioning BNP, but many others, I believe.
Yeah.
And there is also a huge responsibility in your hands with regard to your business partners.
Absolutely.
So, how do you maintain this and how do you get control out of this outsourcing chain? You know what I mean?
Yeah, so I think the complex thing about your questions is they're so detailed and so good in so many different directions. So let's take this one up. So you correctly mentioned, right, the most important currency that we have towards our customers and partners is trust. And so, of course, right, this was one of the things that we also considered when thinking about, okay, who are we working with? These need to be trusted, established, robust institutions that we can rely on, so that we can be certain that for our customers, this is they get the highest standard when it comes to these things. And so there was one criteria: how stable are they? Kind of is this business that we need from them a strategic priority for them? How well are they set up? How many assets do they have specifically? Right. So those things were super important for us as a meta point. The second one was kind of mostly around, okay, what's the technical functionality that we can get there, and how do we get it? Right. So how do we integrate? How long does it take? How complex is it? All these things. And then the third important part kind of also was, the people that we work with, and are they invested into making their partner successful, and do they see fintech as an important part of their strategy? Because honestly, right, you need to be very frank that the business you bring especially in the first years, is comparably very small to the institutional business that they're running for years and decades. And so you need not just to have one sponsor that likes you, but you need to have an organization that believes in what you do.
Yeah, of course.
Because if these people are great and they're sponsoring you, then they offer many greater things, and you never know how those things turn out. And so it requires an organization to be really committed to this way of doing business and having a similar view on the future. And so that's what we found in our partners. And of course, right, there's a bunch of other facts around commercials and contracting and stuff that also play a part in it. But from like a high level perspective, kind of those were the three different things that we looked at the most, and where I think we are super grateful that we have found partners that we feel like we're really aligned with, and that it's a joy to work with, not just for me, but for the people that actually are doing the work, so the whole team. And so that's, I think, has been clearly on the partner selection side very good decisions that are now proving as we are entering the market and expanding.
And maybe the fact that you had you raised quite a huge amount of money with very prestigious and strong investors, that certainly has helped and strengthened your position.
Absolutely. I mean, that's clearly. I think there's a few things that you need to do in order to kind of right. I wouldn't compare it to the whole frenzy that's happening in AI, where people are saying, "Oh, you need X billion to kind of join the race for a fundamental model." But I think there's a similar degree of seriousness and commitment that you need to bring to the table to show your partners, okay, they're in for the long run. And ultimately, the capital isn't about spending it all. And yes, it's about investing it, but it's about also being able to show, okay, we are around. You can rely on us being there for you.
Okay. Cool. So can you take just one or two examples? I'm thinking of Holvi because this is the use case that we wanted to touch upon, and explain to us how they have integrated to your solution. What was the initial pain point that was identified with them, and what drove them to choose your API over developing an in-house solution?
Yeah. So coming back to the very beginning, right? Holvi is what we would categorize as an embedded use case. Why? Holvi is an SME neobank, which means that today already they're offering financial products to SMEs in Europe. And that means they have an existing customer base. They have an existing kind of setup up and running. They're actually also regulated. They're a so-called e-money institute. And so the pain that they brought to us was, we are competing with banks and we're competing with other players in the financial market. And they all start to offer interest, some form of interest to their customers. And we see that we are losing deposits and we're losing customers, and because we can't give them something equivalent. What is it that we can do? As an e-money institute, you aren't allowed to give out interest to your customers directly, and so this is a hurdle, because especially over the last years, many firms have become e-money institutes, as this has been an interesting way to enter the market and provide valuable payment services. And so they came to us with the business problem of what is it that we can do here? And is there an opportunity for us to leverage investing for that? And so we sat down and we basically kind of designed a treasury product or yield product together, where we give Holvi's SMEs access to money market funds, which is one of the most secure assets out there. They have very low risk rating. They've mostly invest in government bonds of core European countries, right? And thereby achieve not just an interesting risk reward framework, but also a yield that already kind of or that mostly trends around the ESTA. And so by helping Holvi's customers to invest their funds into this MMF proposition, they actually then get a return on them. And so that's kind of the product and the proposition that we designed. And it's an interesting kind of question, right? Because why should you do it? And I think what competition is one angle and differentiation is another. And then I think the key question that you need to ask yourself is, what's the kind of world that we'll live in? And if you believe that there's not going to be interest and there's interest rates are going to go back to zero, fair enough. If you think that interest rates are going to stick around because we're going to continue to experience some form of volatility with inflation, then it means that interest will be there. And if interest will be there, banks will most naturally start to offer this to their customers. And the way how much they pass through will go higher. And so the only question that you need to ask yourself, is then, do you want to be the first one offering something like this, or do you want to be the last one offering something like this? And so I think for us it's been very cool to work with the Holvi team. We've been kind of trailblazers there, and I think it's one of the first EMIs in Europe starting to open up this opportunity for their customers. And so that's kind of the proposition that we have live. Happy to kind of go a bit deeper into the exact experience and what's the value there, but maybe kind of pause here to give you the chance to kind of drill deeper.
And in the case that you mentioned, the Holvi case, it's a new player entering the space. Do you have also, I would say, more old players coming to you to go faster on one specific go-to-market, on one specific product that they don't really want to build in-house? They would lose too much time? Or is it still in the beginning?
Well, I mean, it depends how you define Holvi, right? I think they recently had their 10th anniversary of being a regulated company. So I think they're around for quite a bit. But indeed, we're also seeing kind of more and more established institutions coming to us and starting conversations and, figuring out, okay, how can we take what we've built or what we've outsourced to other players and bring it to the next kind of generation of infrastructure? And that's an exciting conversation where we usually try and figure out, okay, what's kind of something that we can bring to market that can prove the value quickly and can help both sides build trust. If you have billions and billions of euros in your existing offering, you don't just want to transition this all at once. And so what we try to figure out together with them is, okay, what could be kind of a speedboat proposition that we can bring to market that helps to demonstrate the value and for them to get comfortable. So that then over time you can really take on the entirety of the business. As one, you need to scale and build out your platform, but then on number two, you need to get everyone comfortable with making that, because in the end, right, I mentioned it, we're in the business of trust, and so you need to be really able to kind of build that up. And I think the most reliable way of building up trust is just by saying you do something, doing it, and repeating that all over again. And I think especially as someone that kind of comes into the market, that's one thing that we focus on, and where we are very much focused on making the first partners that we have extremely happy so that they speak as a reference for us in the market.
And how do you ensure scalability and security within your infrastructure to meet the needs of both the financial institutions and startups, but also, of course, the requirements from the regulator, the BaFin?
Yeah, I think there are three aspects to it, right? The first one is understanding what is it that you're regulated with and how do you comply with these regulations. And that starts with setting up the right strategies, policies, procedures, work instructions, and that comes both from the governance perspective as much as from, okay, how do you actually make that happen? And that highly impacts the way how you make decisions around your technology, right? You very much need to focus on getting things that are open source, getting things that are interoperable with each other that you can switch out easily. So there's very little proprietary technology that we rely on, and we try to use kind of frameworks that we can plug in and could go to different kind of ecosystems too. Number two, I think, is picking the right partners. There's a few things, I don't know. One example is you don't build your own data center anymore today, right? You go into the cloud. And so then it's the question, okay, if you do that, who is the preferred partner? And for us, right, we choose AWS because they have a long-standing history in financial services. They know how this works. They have done it multiple times, and that's something we can benefit from. So once again, a trusted partner. And then the third aspect, definitely one of the most important is getting the right people on board. Implementing this as part of your culture, making it part of your culture. And so for us, that's meant, I think, it's like the 11th or 10th engineer. We brought someone on board that was very focused on security, and that helped us kind of not just develop these things, but integrate these things into the way how we develop and make everyone else aware of this. And so that including also then with testing that you do from external parties and your audit and stuff makes sure that you really have a robust not just system, but then also culture and awareness internally. So for us, it's a major topic, of course.
So you said in the beginning that your mission is really to democratize access to stock markets for European and retail investors. So it's a huge mission. So what are the main obstacles that you encounter in fulfilling this mission, you would say?
I mean, first of all, right, sometimes for us it's about, as you said, opening up capital markets. We call it internally grow investing opportunities. And it doesn't just mean retail; it also means for businesses and freelancers. And actually, businesses, the problem is even worse because the legacy processes are even more shitty. But that's a whole different podcast episode. Focusing on your question, what do we see as the main obstacles? I think, in the end, there's two, right? One obstacle is, I think, culturally, right? If you compare it, the awareness in Europe for investing isn't as high. That's something that's changing, especially with younger generations, right? We talked about, some numbers at the beginning. In Germany, we have 15% of people that invest on average. But if you look into younger generations, it's way higher. It's more like 40% plus. And this is driven by many things, including also the adoption of other digital assets. But that's really helpful. And so I think that's changing, but it will take time, right? Because this is a generational process similar to the wealth transfer that will happen over the next 10, 20 years. So I'm positive on it. But of course, right, every day that we lose on this journey is a day that, you could have been in the market. And so I think that's something where, I would wish for everything to go faster on a very macro level. And it requires an ecosystem that's willing to invest and willing to empower that. And I think those things somewhat correlate to, right? I think if the market opportunity is very clear and very open, then I think more people are willing to invest. But also sometimes you need to invest first to make that market opportunity happen. And so we're super happy, that we're able to collaborate with so many partners and that they are on by themselves as part of this journey and executing on this mission as much as we do. But for sure, I think we would love to see more there. And that's something which we try to promote by making it easier, faster, and ultimately also cheaper to integrate this and make a successful business case out of this. And so that's, I think, are the two key things that we are focused on and that we see and that we would love for to happen quicker to bring up adoption.
Do you concentrate on German market specifically, or do you open to other different European markets?
Absolutely. I mean, if you want to build a big company in Europe, you need to think European. I would even argue you need to think global. If you're a regulated business, there is some constraints to the ambition level that you can have. And so for us, it's definitely about building out a European presence and European business. And we talked about a few of our partners, and they are European companies by default. So I think latest in 2025, they will make us be European as well. We started in Germany, and I think that's a strong foothold for us that brings a few assets to the table that can be super valuable in other markets. But that's definitely one of the things that we're eyeing in the future. And we already passported our license to a bunch of geographies. And so we're more than open for business there as well.
And last question about the design of your product. So how do you concretely collaborate with your partners, with your clients to create new investment opportunities? And do you have a research team internally? How is it working concretely?
Yeah, I think there's two parts, right? Number one is technical one. And we haven't talked about this a lot, but basically Markets is an API first company. What this means is that we offer a set of interfaces that you can tap into to integrate our services. Why is that important for your question? Well, it's important because we don't tell you how the experience should look like, which gives you a great deal of freedom and flexibility, as in, what do you think is the right user experience for your customers? Why do we do that? Because we believe that our partners know their customers best. And they know best how this needs to be part of their experience. What's the wording you use? What's the design language you use? What is it that you want to put in focus? Is it a very sophisticated product? Is it a very beginner-friendly product? How do you go about these things, right? And so that's I think the key consideration or the key design decision number one that we made to help promote innovation, because it gets you thinking, okay, how do we make this happen? What can we do different? And then it's also, an active process that we go through with our partners in challenging them and first helping and educating them what we're seeing out there in the market and what's there working and whatnot. And then by pushing them to go on their own journey and define this and put in the work with their customers and teams to make that happen, and then iterate quickly, get something to the market, get real data, and then build upon it. And so that's really for us the way how we approach it. And then we are super fortunate that we have a great deal of experienced people that come from places like Trade Republic, Scalable, or others, where they have seen different degrees of how this can be implemented, and not just there, but also from very different places, right? That have nothing to do with investing, and then combine this in helping our partners build something that adds value to their customers.
Great. So as I said, you raised quite an important amount of money. So what are your next steps with this major step?
Yeah, I think for us it's really on establishing our foothold in the market. And I think we talked about a few of the partnerships that we have that we're excited to build out. Right, I think it's about making our partners successful, and then it's about the next verticals for us. As I mentioned, I'm very excited about all things B2B, and I think there's a huge opportunity to simplify and improve the experience for SMEs to invest. And when I say invest, right, this isn't option trading, but what we talk about is finding smart solutions to deal with your liquidity and that your money work for you. And then I think the other second obvious area for us to look into is wealth management, where there's going to be great replatforming of some sorts, not just I think across the whole European Union, and being part of that and helping, as you mentioned, right, the more established players to develop and improve their propositions, because I think competition in consumer investing hasn't been as strong as it is right now. And so if you have an existing platform, developing this further is something super interesting, and we love to be part of that. So those are the two kind of key things from a how do we think about it from a use case perspective. And then of course, right, our ambition isn't just to do this in Germany, but really go European, and then that's something where we will take the next steps with our existing partners and also with new partners to bring that to reality.
I wish you all the best with this. Max, my final word on the film scale is always a recommendation of a book or podcast or a video, YouTube video. What do you recommend to us? You get inspired.
Very authentic. Yeah.
You seem so inspired.
Yeah, there's a great deal of things I consume. I also listen to a lot of podcasts. I'm a big fan there. I think there recently was an episode with Vlad, the founder of Robinhood, and I think they have done one thing, or they've done many great things, but one thing which I think is incredibly impressive is how they've built several multi-$100 million business lines in one business. And so I think there's lots of wisdom and experience kind of bundled into that podcast episode. And I think he's been on a small PR tour recently, so there's quite a few.
But on which podcast was this? On which podcast?
I think this was with Harry at 20VC.
Harry Stebbings. Okay. Yeah. Excellent. Thank you, Max. Very interesting. Thank you for all those details. And I wish you all the best.
Thank you so much.
Bye.
Bye-bye.
Thank you for listening to FinScale. Don't hesitate to subscribe to the newsletter on Substack to stay up to date with the latest innovations. You can also find the podcast in audio format on all listening platforms and in video format on YouTube. See you soon with Solène Niederkorn.